Hey, if you're a driver here in the UK, you're going to want to listen up. The car tax we all pay is about to change. So we're going to break down exactly what's being updated in April 2026 and, more importantly, what it means for your wallet. Right, the big day to circle on your calendar is April 2026. Now, look, these changes aren't massive, but they are going to affect millions of us. So the real question is, what's it actually going to cost you? Let's dive in. First things first, let's talk about the standard tax rate. You know, the one most of us pay every single year. This is the change that's going to hit the vast majority of drivers out there on the road.
So the government's bumping up the standard annual rate to keep up with inflation. Right now, it's £195. From April 2026, it's going up to a nice round £200. It's only a £5 jump, I know, but hey, it's still an increase to factor in.
So who exactly has to pay this new rate? Well, it's pretty much everyone with a car registered after April 2017. Doesn't matter if it's petrol, diesel, a hybrid, or yep, even a fully electric vehicle. If that's your car, you'll be paying that new £200 rate. All right, let's move on because it is not all bad news. In fact, there's some really good news coming, especially if you're thinking about getting an electric car. And this is all about that so-called luxury tax. First off, what even is this thing? Well, its fancy name is the expensive car supplement. But put simply, if you buy a brand new car with a high price tag, you get slapped with an extra bill of £425 every single year for 5 years. Ouch. And right now, that high price tag kicks in at just £40,000. Now, that might sound like a lot of money, but with the price of EVs, it's been catching out a lot of perfectly normal, family-sized electric cars, which really adds up. But here's the good news I was talking about. From April 2026, that threshold is being lifted to £50,000. That is a huge deal. It gives you an extra 10 grand of breathing room before that pesky supplement even becomes a thing. So what's the bottom line? Well, if you buy a new EV that costs, say, £48,000, under the new rules, you will save a cool £425 a year for 5 years. That's over £2,000 back in your pocket. Now, this is a really, really important point, so listen close. This tax is all based on the car's official list price, the RRP. It doesn't matter if you're master negotiator and get a massive discount. If the official price is over the threshold, you're paying the tax. So always check that list price.
Okay, on to our final change. This one's for all you company car drivers out there. If you get your car through work, especially if it's an electric one, there's a small but pretty important update you need to know about. This all has to do with something called Benefit in Kind tax, or BIK for short. You know, it's basically the tax you pay on the perk of having a company car you can use for your own personal trips. It's calculated as a percentage of the car's value.
And here's the change. For electric cars, that BIK rate is going up by 1%, from 3% today up to 4% in 2026. Now, let's be clear. Even with this increase, electric company cars are still way cheaper to tax than any petrol or diesel model, but it is a nudge upwards.
So what does this actually mean for you? Well, it means the amount of tax that gets taken out of your paycheck each month for that company car, it's just going to go up a little bit. If you're looking at a new company car deal around 2026, definitely make sure you get an updated tax estimate.
Whew, okay, so we've run through the 3 key changes coming our way. Now, let's pull all that information together into a super simple game plan so you know exactly what this all means for you. Let's break it down. If you drive a standard petrol, diesel, or hybrid car, just expect that small £5 increase in your annual tax. Simple. If you're looking to buy a new electric car, the big news for you is that you can now look at models up to £50,000 without getting hit by that extra luxury tax. And finally, if you've gotten an electric company car, just be prepared for your monthly tax bill to creep up just a tiny bit.
So there you have it. That's the lowdown on the car tax changes coming in April 2026. They're not exactly world-changing, but they definitely shift the costs of running a car just a little. And it really leaves you with one final thought, right? With these new costs and these new breaks, maybe it is time to rethink what your next car will be. Something to chew on? Thanks for tuning in.